Welcome to Aging Insights. I'm Melissa Chonker, Executive Director of the New Jersey Foundation for Aging. The Foundation's mission is to enable seniors to live with independence and dignity in their communities. Aging Insights is produced by the New Jersey Foundation for Aging to provide information and resources to boomers, seniors, and caregivers. We're aware that financial abuse or exploitation can have a huge impact on our older adult population. Not only do we want to educate you as the consumer about how to protect yourself, but also understand what banking and other professionals can do to assist in the reduction of this terrible crime. I'm joined today by Jeannie Rentazelis and Larry Santucci from the Federal Reserve Bank of Philadelphia. Thank you both for joining us today. I'm really happy to have you with us. And Jeannie, I think you're going to start us off and explain for our audience just what the Federal Reserve Bank of Philadelphia is and some of the work that you do there.
Yes, and thank you so much for having us here today. This is such an important topic for older Americans and their families, so we're really happy to be able to discuss it a bit. So when people think about the Federal Reserve, I think that the first thing that comes to mind is typically the Board of Governors in Washington, D.C., which is where Chairman Powell sits and where the Janet Yellens and the Ben Bernankes before him resided. But we're actually a whole system, and we have 12 reserve banks that are spread out across the country, in addition to the Board of Governors, that form our country's central bank. And we regulate banks, we formulate the monetary policy for the country, and we work to improve the financial system and how it works. So while most of the reserve banks, or all of the reserve banks, have the same core functions, we do have some differences in the types of things that we focus on. And so whereas the Dallas Fed may focus on energy based on where they sit, and the New York Fed will look at financial markets in Wall Street, the Philadelphia Fed has picked one of the things that we would like to focus on as consumer finance. And so that's how we came here to you today, that we have had to focus on elder financial services. Yeah.
And just so our audience knows, when you say Fed, you're referring to, this is the shortened version of, instead of having to say the Federal Reserve Bank every time, right?
Yes.
So no matter which state it's in, you refer to it as the Fed. So you're the Fed in Philadelphia.
Absolutely,
okay.
yes.
So just if the two of you keep mentioning that, I want our audience to know what you're still talking about the Federal Reserve Bank.
Yes.
So you mentioned that consumer finance is a big part of it, and so you also have a Consumer Finance Institute, which Larry's going to go into a little bit more detail on for us. But I think it's important for our audience to understand that this is such a priority for the Fed that this is you've created a specific institute to look at it. As you mentioned, this is a really important topic for all Americans, but particularly for older adults as well, and we'll get into some of the specifics as why. But if you could tell our audience a little bit more about and maybe define financial abuse or exploitation so they understand what we're talking about.
Sure. So when we're talking about financial exploitation for purposes of our paper, we co-authored a paper together, we are generally thinking of a situation where an adult is being exploited based on some vulnerability. And it may be that there's a cognitive impairment or a physical impairment that someone is taking advantage of in order to get a hold of their financial assets. And then we also talk about financial fraud, where there can be deception or dishonesty that's used to also take advantage of someone. So perhaps someone's trying to sell you goods or services, and there's not really a good or service that you're going to receive, or if you do get something, it's not of the same value that has been purported when it's been offered to you.
Yeah. I think that's really important for our audience to understand the difference there and what the different things are. So because that leads us right into the fact that there are many different types of both exploitation, fraud, and then we can add into the mix scams as well, right? So
Yes.
Could you explain to us a little bit more of the different types that are out there of those various terrible things that people can do to older adults in the financial realm?
Sure. I would say that the types of scams are really limited only by the imaginations of the con artists. And these can be perpetrated by people that you know, they can be strangers, they can be business people that are trying to take advantage of you. And we've seen a very large number of different types of scams. So I'll list a couple of them for you, and then I'll describe one in a little bit more detail.
That'd be great.
So we've seen romance scams where someone tries to pretend that they're dating someone and getting into a relationship in order to get into their financial assets. We've seen lottery scams, of course. Those are often big in the news, the Nigerian princes and the tales that you have won millions if only you'll pay some sort of tax. Right. There are sham charitable organizations, of course, and I've gotten to the point personally where I will not make any contributions over the phone ever. because of how many shams there are.
Yeah.
There are home repair scams, and you see these often after natural disasters, after hurricanes, where people come door to door and say you've had damage to your roof or damage with mold, and they'll try to get you to make down payments for work that will never be done. We just saw one, I just saw one personally last week, where a friend from college posted up on Facebook that her mother had been an intended target of the grandparent scam. And it was a variant of this where people get phone calls and they're told that their grandchild or their niece or nephew is in danger in some way. And in this case, the person was told that her nephew had been in a serious accident and he needed $5,000 for medical expenses. So she was very astute and she called her daughter and said, "What do you think? Do you think he needs help?" And the daughter said, "Let me call him and I'll see if he's okay." Called him, woke him up in college, and he, of course, was totally fine.
Yeah.
And I was very pleased to see, I thought that this was brilliant.
Yeah.
Somebody else posted on this Facebook site and said that they also had been an intended victim of this type of scam. And instead of just waiting until after the phone call was over, she actually made up a name. She said, "Oh, Josh needs my help? Yes, Josh needs your help." Well, that wasn't a name in her family.
Right.
So she was able to bust it on the spot.
Yeah. I think that's, these are the grandparent scam in particular is something that we hear about a lot from folks, and it just keeps resurfacing and taking different forms. So sometimes it's an accident, as you mentioned. Sometimes it's, they're on spring break and they got in trouble and they're in jail in a foreign place and they need help. So it takes many forms, and so the more we can talk about it for seniors and get that out there so that they understand that they should, do some checking before they offer any assistance is good advice. So I'm glad to hear that the two individuals that you heard about that were intended targets were quick enough to come to that conclusion. Because unfortunately, in the moment, heat of the moment and emotion, you feel like I need to help my family and you want to do the right thing. So I'm glad that we can talk about those things. So I know that we've just talked about scams and things that can happen from strangers taking advantage, but you mentioned before in the definition of exploitation and fraud that this could also take on a more personal note of a family member or a loved one who might take advantage as well, right? Tell us a little bit more about that.
Sure. So unfortunately, we see sometimes situations where even a son or daughter, an adult son or daughter of a senior citizen will take advantage of a parent, or a grandchild might do that. And we sometimes hear this called inheritance impatience, where they know that they might be the intended beneficiary of someone's estate, but they may get a little greedy, or they may have some problems that they need to deal with that makes them want to have ready access to cash now. So you can sometimes see people just steal money out of a wallet or write a check that they're hoping that their parent won't notice. And sometimes it gets even more insidious than that. You can see situations where someone will be granted a power of attorney, and they'll use that power of attorney to benefit themselves, sometimes clearing out an entire account.
Yeah, it's really, and I think we're going to get into a little bit more in terms of, understanding the impact this has on seniors, not just financially, but the idea of having to report that this has happened and that the perpetrator could be a loved one or someone else is even more difficult for seniors, right? And for anyone, I think, if you have to point to a family member that's done some wrong to you, right? And so I think, Larry, you also have some statistics for us on these sort of things. I don't know if you want to shed any light on the types as well, because I know that you also have a wealth of knowledge on this topic. So if you want to maybe start out with telling us maybe filling in some information on the types, and then also giving us some statistics of the prevalence of this problem.
Sure. So one of the things you want to keep in mind when it comes to fraud is that these fraudulent schemes tend to play on people's insecurities, needs, wants, desires. So it's always going to be a close family member who's in trouble, or it's a relationship. But typically, and I think we're going to talk about this, when something seems too good to be true, it is. I have a family member who was just involved in a scam where they got a check in the mail. Too good to be true? It was too good to be true, and it ended up being fraud. It was a fraud that I'd never heard of. So you really have to approach these things with a healthy degree of skepticism and keep up on the latest scams. And I think that's something that we'll talk about. And there are resources, fortunately, for people. So as far as statistics go, solid numbers are really hard to come by. And I think that's probably a topic for an entirely different episode. But what we do know is that this is a multi-billion-dollar problem. So we're talking tens of billions to hundreds of billions of dollars. One estimate put annual losses at $36 billion a year from financial abuse, so that includes fraud and financial exploitation. But the crimes are so underreported that you really don't get a good number, a good estimate of how big of a problem it is. And a lot of people I've heard suggest that it's over $250 billion a year. And those are losses to the consumer. That's not to the bank, it's to the consumer. I just want to mention that so in terms of who this affects about 1 in 5 people over the age of 65. And as we age, because of cognition and changes in cognitive decline, you're more likely to be susceptible. So someone who's 75 is more likely to be a victim than someone who's 65, and so on and so forth. With the baby boomer population retiring, and they've been doing so since 2011, they will continue to do so until 2029. America is becoming a target-rich environment for scammers. We just have to keep that in mind, that, as Jeannie said, the scams are going to be coming faster, more frequently, and with more different flavors and varying degrees of sophistication.
I'm glad that you mentioned that the statistics are hard to come by and really not that always reliable, because we've known for a long time with elder abuse in general that it's underreported. And that could be a variety of reasons, and particularly with financial abuse where the older adult might feel shame or embarrassment because they fell for a scam or someone took advantage of them. And then, as I mentioned, in particular, when it's a family member, just all of those overall concerns with reporting a family member or getting them in trouble, or in some cases, if the abuse is more prevalent than just financial, they might actually be fearful of retaliation if they tell on that individual.
Absolutely. Right.
And so I'm sure that's a lot of what your work focuses on, and some of the things that you've talked about. As Jeannie mentioned, you do have the Consumer Financial Institute, but you both also co-authored a paper. Could you tell us a little bit about the paper and what the goal there was and some of the...
Well, before I tell you about that, if I could just say one thing about the Consumer Finance Institute. We're relatively new.
Oh, okay.
But consumer finance is a major part of the economy. It's a multi-trillion-dollar market. So when you think about consumer finance, you probably think about your mortgage, but there's mortgages, student loans, credit cards, personal loans, fintech loans, P2P loans, and auto loans. So there's hardly anyone that consumer finance doesn't affect. So the Consumer Finance Institute at the Federal Reserve Bank of Philadelphia is just a group of researchers such as myself who are dedicated to studying this problem. The sad fact, and this is why we get into writing the paper, is that fraud and financial abuse can wreak havoc with not only an older person's savings, but also with their credit. Particularly, when the savings runs out and they have a lover or they're being scammed. I mean, the next thing they turn to is credit. Their credit card for a cash advance or a personal loan or something like that. Those things can have spillover effects to the entire economy, and it can affect all of us through higher cost of credit, through defaults, and also lower supply of credit. So these are things that we think are really important to the economy. These are things that we want to continue to address through our research, and something that we're going to be keeping up on for the foreseeable future.
Yeah. I think that's a really interesting point, that we're not only talking about the personal loss and financial trouble that someone can get into if this happens to them, but also, the general effect on the economy, and how important it is for our viewers to understand we're giving them advice not only to protect themselves, but if they share this information and help protect their loved ones or themselves, they're also preventing further issues with our general economy. And how all these things work and how it affects the banking system.
Absolutely.
Yeah.
That's right.
I think I really appreciate you making that a big point of it. You mentioned cognition, and so I know that played a part in the paper that you both authored. So if you want to tell us a little bit about the role that plays there in terms of being a victim of financial abuse.
Sure. So, and this is not widely known and not widely understood, but I think at the heart of this is the fact that our cognition declines over time. And when I say cognition, I basically mean our ability to take in new information, process that information, and then use it to make decisions. That ability declines over time. It may be imperceptible to some people, but for the vast majority of us, we're talking about 2/3 of us will experience and be diagnosed with some form of acute cognitive decline by the time we're in our 80s. So this is a massive problem. And unfortunately, one of the first skills we lose when we're experiencing cognitive decline is our ability to manage our day-to-day finances. So paying our bills, remembering to pay our bills, remembering that we paid our bills already, and making good financial decisions. And this condition is called diminished financial capacity. And it's often a precursor to a condition such as mild cognitive impairment, which is not as mild as it seems, or Alzheimer's, which is, we're all very familiar with. So there's a big role that cognition plays in this. And the other unfortunate fact is that someone suffering from diminished financial capacity, they're probably the last person to realize it, right? So what you want to do is have safeguards in place before that happens to you. And it may not happen to you, and that's fine. But if it does, you want to make sure that you have these safeguards so you do not experience financial losses from diminished financial capacity, fraud, or exploitation.
Again, all great points, because we can't predict the future, but we can plan for some scenarios. And I think it's important to mention, that, as you said, it doesn't happen to everyone, but it's a good idea to have a plan in place in case you start to have issues with that. And certainly as we age, we know that there are changes that happen, but it could happen to someone at a younger age. It could happen to someone later in life. There are a lot of other factors of your own personal genetics and risk factors that might make this happen for someone sooner or later in their life as well. And with that, we know, Jeannie, that there is a great amount of stigma attached to that, admitting that you might be having trouble and those sort of things. Can you talk to us a little bit about that part?
Sure. So I think it's important to have this discussion in order to shed some light on the stigma and hopefully bring it out of the closet. I think that we've encountered people that have expressed shame and guilt and perhaps even fear about sometimes having been victimized in this way. And one of the things that we've heard consistently is that there is a loss of independence that is at the basis of some of that fear. So just as we would not necessarily want to give up our ability to drive or give up living in our own home, people don't want to lose control of their own finances. And so that's a tough thing to think about. So we would hope, though, that people would consider the fact that, first of all, they may be able to get back some of their assets if they report and bring forward their victimization in some of these scams, and then also help other people prevent others from being scammed through some of these situations. So I think that those are some really important points. I think the other thing that I would try to encourage people to remember is that this is not a type of thing that targets only one group. So there's really no reason to have a stigma attached to being a victim as a senior citizen, because people across every demographic have been targeted and have been defrauded by some of these scams.
Yeah. I think that's, a really important point, that you've both mentioned already, what makes a senior more at risk or why a scammer might target someone in that age bracket. But it can happen to any of us. I'm sure you both have had it. I've had calls to my cell phone where they say I've won a prize, and, when I call to claim the prize, or I know we're all aware of the famous, Microsoft or other computer programs where a scammer calls and identifies themselves as being from there. Oh, there's something wrong with your computer. Are you in front of it? And it's really a scam. And so it can happen to anyone at any age. And so I think it's important that we mention that, but we want to also put into place those safeguards that might protect people who are more targeted by some of these scammers, which unfortunately happens to be our older adults at times, right?
Yes.
So based on all of the things that you've both already told me, what are some of your best pieces of advice for consumers to really protect themselves from some of these issues?
So some of the things that I would recommend are getting some monitoring tools in place to check your credit report on a regular basis to make sure that there's not any sort of loans that you're not familiar with that look suspicious that you did not authorize. Another thing that you can do, and this is actually a recent legal change within the past month, it's now free to freeze or unfreeze your credit profile, and that's on a nationwide basis. If you are not in the market for taking out a loan, and many seniors are not, then you can freeze your credit until the point that you do have a need for access, and that will prohibit someone who might take advantage of your identity to take out a loan from doing so.
And from what I understand, in doing this, they've also kind of eliminated any negative impact that would have on your overall credit if you do freeze it, correct?
That's right.
Yeah.
Absolutely.
Yeah. So I think that's important for people to know, and I think checking your credit score is great advice. Can you give some people some ideas of how they can go about doing that? Because they might think, oh, well, I don't even know where to start. How do I check my credit score?
Well, you can throw that over to me. So
Sure.
one of the things we have been in contact with is some of these programs at financial institutions where they are offering free credit scores now, and this is popping up everywhere. So big banks, small banks, they all have the ability to offer free credit scores either as part of your deposit account or as part of your credit card. So if you log into online banking, you may already see this information. If not, you have access to your credit score at least once a year for free from all three of the bureaus. By the way, if you're putting credit freezes on, you need to do that at all three of the major bureaus. That's Equifax, Experian, and TransUnion. Make sure you do it at all three. But there are ways to access your score and access it for free, and you may not be aware of it. So the first thing I would do is log into online banking and all your financial accounts, and see if any of them just have your score for free. It may be up in the top left corner or top right corner or something like that.
Yeah, so good advice is to, not only use those three bureaus that you mentioned, but also to contact your bank that you do your personal banking with and see if they can offer you that service as well.
Absolutely.
Yeah.
Right.
Great advice, really great advice to give people. And I mentioned in the beginning of the show that we not only wanted to address how people could protect themselves, but also what are we expecting from our banks and other financial institutions to protect us. So can you tell us a little bit about what might be going on within banks that they're putting into place to help protect people as well?
Okay, yeah, and this really gets to the crux of what we're talking about in our paper, and where we make a series of recommendations. And I just want to say right up front that at least at the federal level, none of these things are requirements. No financial institutions. When I say financial institutions, I don't just mean banks. I mean brokers, broker-dealers, financial advisors, places where you keep your wealth, your 401ks and things like that. None of this is mandated, at least under federal law. Now, things get a little bit different when you talk about state law. There are so-called mandatory reporting requirements. Again, that's probably a topic for but at the federal level, none of this stuff is required. So our first recommendation is that all frontline staff, so frontline in a bank is your branch manager. They're the tellers. At a broker, that's probably your financial advisor, someone like that, someone you have contact with, people at a call center if it's an institution of that nature. They need to be trained to detect signs of diminished financial capacity, fraud, and financial exploitation. So training is number one. And that's on the front end. Now on the back end, the financial institutions should have account monitoring software that's going through your accounts and looking for patterns of activity that are consistent with fraud and financial exploitation. That's number two. The other thing they should be able to do is involve the client and any financial caregiver, financial helper they may have in monitoring these accounts. And they have things like read-only account access that you can give to someone that cares about you, or text messages or other kind of automated alerts that you can set up, and that can help you monitor your account. The other thing that is really, really important is to have a trusted contact assigned to all of your accounts. And a trusted contact it's not a joint account holder or anything like that. A trusted contact doesn't need to know your account balance. They don't need to transact in your account. They don't need to know what you're doing with your money. They just need to be someone who's there as a resource for the bank, so that if the bank suspects that you are caught up in a fraud, a grandparent scam, or a romance scam, or something like that, and they can't convince you that you are involved in a scam, or you don't want to believe it, then they have someone else to go to talk about this and talk through this and maybe help convince you. Because otherwise, if they can't convince you, they have to put that transaction through. I mean, it's their job.
Right.
So they have to have that in place. Another thing that we recommend is that the banks should have a way to prevent power of attorney abuse. And that's something hopefully we'll be able to get into a little bit. Power of attorney is real big here, and it can be a lifesaver, but it can also open the door to a lot of problems. And then the last thing we really highly recommend is that the financial institutions start making it a pattern and practice to report these crimes to local law enforcement and to adult protective services. They should start doing it every time. They should build the infrastructure to ensure that that happens. And what that does is, of course, the bank can't go after the perpetrators, right? Law enforcement has to. It also creates a paper trail so that some of these multinational crime organizations and such like that that are behind these things are able to be caught because they're creating a paper trail by affecting you and you and you. So these are the things that we recommend banks to do. And if you're a financial institution, if you go to your financial institution, you ask them about these things, they should have these safeguards in place. If they don't, you probably want to shop around. This is your financial future. This is your retirement security. You're not going to be able to go get a job, at least at earning the same amount of earnings that you had pre-retirement. So it's critically important that you preserve and protect these assets and make sure that your financial institution does the same.
I'm glad that you brought that up because, we've done a lot of research at the foundation on economic security of older adults, and we know that one of the problems with financial abuse is that it's harder for them to recoup those losses because they're beyond their earning years in most cases. So I think that's a really good point. The other really good point is that another way to protect yourself as a consumer is to be aware of the practices of your bank, and if they don't do some of these things that you're outlining as the recommendations, that maybe you should look for a different bank that does meet those needs and is looking out for you. Because if you're in a pressured situation from a scam artist to provide them with money and someone at the bank recognizes that, they can help you to report that to law enforcement. Whereas if your bank just says, oh yeah, okay, we're going to process this, and doesn't take a second look at it, then that's another way that you become a victim. Yeah. Right. And so I think it's important that we're looking at those things. You mentioned power of attorney, and I do wish we had a whole another show to talk about that. We have talked about it in the past with other guests, and we know that it is an important issue to talk about. I was thinking about it, as you said, a trusted person. It really, that's the tricky part, is figuring out who in your life you can trust to give those privileges to look over, whether it's a power of attorney or someone that your bank can rely on as a secondary person to be looking at your finances, right?
Absolutely. Yeah. One thing I would say about that is that if you put a power of attorney in place, it's helpful to get expert advice from someone, first of all. But then even if you identify one person that you trust, then put some checks and balances in place so that another family member can oversee what that person is doing. Have an annual accounting or have bank statements sent to another individual, and that will allow some peace of mind.
Absolutely. So I think the biggest takeaway there is you can't be too cautious, right?
Correct.
And so I really appreciate, again, you both spending your time with me today and going through all of the details of this and sharing this important information with our audience. And I hope that they take some of your recommendations into account and ask their bank those important questions as well. Thank you for sharing your time with us today also. Aging Insights is produced by the New Jersey Foundation for Aging and is made possible by donations to the foundation. To become a sponsor for Aging Insights programs, please go to our website at www.njfoundationforaging.org or call us in the office at 609-421-0206. Our previous episodes may be viewed on our website. We'd like to remind you to find out about senior services in your area, contact your county office on aging. Their numbers can also be found on our website, or you can call the state hotline at 1-877-222-3737. Thank you for watching this episode of Aging Insights, and remember, aging is everyone's business.